Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to show you how to use Elliott waves theory and Fibonacci techniques applied to the cryptocurrencies. So we're going to have a look at the Bitcoin, ADA Cardano, Ethereum, and Dogecoin. So let's get into it. Alright guys, so the first thing I would like to do is to go with you through the Elliott Wave book that was written by Frost and Presta. So we're going to go through this together. And actually this is a book that has 118 pages. So you can just find it by Googling it on Google, and it's free. So you can all have a look at this. And I did already the job for you guys. I found the interesting information that we are going to use during this course. All right, so first information that is very important is this one. Okay, so page 73 of this book. So basically you have some ratios that are given by Fibonacci to the Elliott waves. All right, so that's why it's very good to combine those two together. And once you know 1 plus 3, so you have 3 different situations: third wave extension, fifth wave extension, first wave extension. I don't see this one very often, almost never. I usually see this one or this one, okay? So either the one in the middle or the one here on the right or left. I mean, those two are a sum up of those 3. So what you need to remember is that once you know 1 plus 3, basically you can deduce the fifth wave. That is going to be equal to 0.618 times the 1 plus 3 in this situation. You just divide 0.618 by 0.382 and 1.618 in this situation. Sorry, you divide 38.2 by 61.8, and here you divide 61.8 by 38.2, and it gives you 1.618. So what you need to remember, a lot of figures have been given here. What you only need to remember is that the fifth wave is equal to 0.618 or 1.618 times 1 plus 3. I noticed that sometimes we have a one-to-one relationship as well, which is not in the book, but what I give you. And here, page 79, here you have even more information, and I'm going to show you right now how to use it on the cryptocurrency market, how you can actually use this information, because Fibonacci trading is something that, you know, people talk about and nobody really knows what to do. It's because you absolutely need to associate it with Elliott wave theory. Otherwise, you don't really know what to do. And once you've done that, you're going to see that basically Fibonacci retracement is going to be used to enter on pullbacks in a given trend. So you first need to identify a trend like we're having right now for cryptocurrency. We are definitely starting a new trend. So we are in the first wave. I'm going to show you this very soon. And we are wondering where the second wave could go. And Fibonacci is telling you the answer, all right? So here, Elliott says that usually the second wave is correcting, you can see here too, to the 0.618% retracement of the first wave, okay? So this is giving you a first information, and I'm going to apply this to the cryptocurrency right now because we are waiting for a second wave. Then you also know that once you're going to complete the third wave, you can have a fourth wave pullback again to enter for fifth wave. So this is rather the situation we have on Tesla, we have on Mara, we have on many stocks. And if you want to enter this pullback, then it's usually more shallow, and it only goes to the 38. Let me zoom in here. To the 38.2%. All right. So 2 things you need to remember. Second waves like to go to the 0.618. So quite deep corrections. And fourth wave, they are more shallow. They like to go to the 38.2% retracement. Now, from my experience, what I have noticed is that second waves sometimes are shallow too. And I personally start to buy at the 50% retracement, 50, 61.8, and I stop everything below the 78.6%. And for fourth waves, I have noticed that they sometimes go further. So basically, it really depends where you have your support levels, because Fibonacci is going to give you areas of supports, and then depending on where you have your real supports or resistance that have been drawn using trend lines and using past Elliott wave countings, then you're going to be able to, you know, select better the type of retracement that you're probably going to have. So 4 things to remember. Fifth wave. So, and here basically I have all the information. So just remember this chart, page 79. Fifth wave, they like to go to 1.618 or 0.618 of 1 plus 3. So this is the information I'm here. Fourth wave, they like to go to the 38.2% of only the third wave. Okay, and second wave, they like to go to the 61.8% of first wave. Now, we are gonna keep this in mind and apply all of this to the cryptocurrency market. Let's get into it. All right, so first, let's start with the king, Bitcoin. So very quickly, what I'm gonna try to do here is to show you how to use Elliott wave principle that says that moves up develop in 5 waves and moves down develop in 3 waves, and Fibonacci associated to Elliott wave. So this is actually very advanced, but I'm just going to keep it very simple here. I'm not going to cover all the possible cases. I'm just going to show you what usually is working. So let's have a look at Bitcoin. I'm on a daily time frame. I'm having the move started in March 20. All right. So we had here a first move up in 5 waves, then a correction, very shallow. Third move up, correction, shallow as well, but a bit deeper. And the fifth wave. The fifth wave is here. It's this one, 1, 2, 3, 4, 5. It finished in a wedge pattern with a bearish divergence with MACD, all right? Market making high highs, the MACD going lower. So this is a sign of weakness, after which we had this strong correction. Now, this correction seems to be over, WXY, that is here. It was a bit longer than expected. In time, I mean, not in spot. We didn't go deeper than 28K, which is the bottom of the fourth, which is something you need to keep in mind. Top of the third, bottom of the fourth preceding waves is the usual level of the correction after a wave is complete. So here it was 42 and 28. We went to 28, but we stayed there a bit longer. Then we had this here breakout. We had an early breakout at 32,000. That I gave you guys. You can go check the video I posted, I don't know, 3 weeks ago or something like this. Then we had the second breakout. That was the confirmation that this correction is over. And right now, guys, it's very interesting. So I had a target at 48,000 for this first wave. So I'm struggling here a bit if this first wave is finished or not, because the little game we're doing here to try to anticipate when the pullback is going to come and how deep it's going to be to enter. So to know where this first wave might be going, I zoomed in. I'm on the 4-hour time frame. And here, for the first thing I'm doing is that I'm putting my resistance level. So here you can see I have a high. Here I have a high. So I have a resistance at 51,500 and another one at 59,000. I had one as well below. That's why I gave you this around 49K, something like this, but whatever. So right now, what is happening? We don't have enough information to predict accurately what is going to be the top of this first wave. What we're going to say is that it's very likely to be one of those resistance levels. So either 51,500 or 59,500. Now, the other thing we can do is try to use Elliott wave inside this wave. But when you zoom in those smaller time frames, Elliott wave is not easy to use actually, but I'm still going to try here. So this could be 1, 2, 3, 4, and 5. So maybe this is a valid counting. This would be a typical impulse. The third wave would be a bit short here. So for example, what is interesting to see is because the third wave can't be the shortest. So here we go from 37 to 48, so 11,000. So the fifth wave must be shorter. So 11,000 plus 44, it's 55,000. So if this counting is to be correct, we cannot go above 55,000. Okay, so this is the first information we can use. But what is interesting here? So to be very honest, I have no clue where the top would be. My guess would be around the 51,500 level now that we have broken the 48,000. But I believe that there's going to be a second wave pullback coming. Okay, and then you can use Fibonacci to kind of build your different scenarios and see where this pullback could come. The first thing is that here we're having a support level at 42,000. You remember where this level is coming from. It was the top of the third here. It was the rebound that we had in March 21. We had also some reactions in the very recent past here and even in the most recent past. And this could have been used as a pullback level to enter a position. And I gave you this as well, guys, on my Discord. So here, the situation is like this. We are in what seems to be a wedge pattern here in yellow. So if we break this level, so around 47,500, we might have a small retest and then go lower. And the first thing I want to show you is that here we're having this bearish divergence. You can see the MACD making lower highs and the market making higher highs, okay? So this is a bearish divergence. So this information combined with the 51,500 resistance level, combined with a valid Elliott wave counting is telling me that this is my preferred scenario. If this scenario happens, usually second waves, they like to retrace to the 50 or 61.8% retracement. So let's imagine we go to 51,500. Then the 50 and 61.8% retracement would be between 37,500 and 40,500. So this is, of course, a nice level to buy if we go there. And if we have a more shallow correction, we would still go to the 43,000 here. So I guess that the 42,500 might be reached in this situation. So if we go to 51,500, we still would have a pullback around mid-Sep, October, around 42,500. This is the first information. Now, let's imagine we go lower. So this is, again, how you can use Fibs, because combined with Elliott, you know that the second wave would probably retrace at least 38.2%, at least. And usually it's more. So imagine we go to 59,000, that this market is very bullish, which is very possible. That's why as long as we stay in this wedge pattern, if you are long, I would not sell. I would give it a chance to go higher, because we might go to 59,000. If we go to 59,000, of course, it's time to take some profits to reload lower. But imagine we go there. Then the 38.2% would still be lower than today's level. All right. So that's why for me, no rush. The 38.2%, which is the minimum retracement level, would be at 47,800. So then it might be a first level you want to buy if we go to 59,000 before. And the 50 and 61.8 are the more usual levels between 40,000 and 44,000. So in most of my scenarios, either we go to 51,500 or to 59,000, but in both cases, we are going to have a pullback around the 42,000 level in mid-September. After which, if this is correct, we would have a third wave starting, all right? And this third wave, once again, we are not sure right now that this is correct, but this looks very nice to me. So if this happens, the third wave would probably go to the 100,000 level, then pull back, and then 130. Why those levels? Same technique as usual, guys. Once you have 1 plus 3, you can apply Fibonacci projections this time, okay? So I'm showing you here how to use Fibs. So you go to the bottom of the first wave, to the top of the third. So you take 1 plus 3, and you apply to the bottom of the fourth, and the 1.618, which is 130,000, is the level we would probably go for the end of the fifth wave. So this is my target for 2022. I'm not sure when, maybe, March or June, something like this. But I do believe we would go there. So we are going to have two opportunities to enter this move. Second corrective wave and fourth corrective wave. All right. So two pullbacks. And once again, I repeat, the first pullback should happen mid-Sep, October, and should go to the 42,000 area, even maybe below. So we're gonna keep an eye on this. Now, let's check ADA Cardano. So now I have the good ticker. Last time I took the wrong one. So here it's probably gonna follow the Bitcoin in terms of trend and in terms of level here. So 1, 2, 3, 4, 5, same thing. And I measure 1 plus 3 applied to the bottom of the fourth, and it gives me a projection that is at 3.8. So I still have some room here for this fifth wave. This is the only information we can have here. We don't have any high in the past data that can help us to build some resistance. So the only thing we have is that the 1.618 would probably be resistance. We also know that sometimes the fifth wave likes to be a 1-to-1 ratio to the 1 plus 3. So this would give us 3 as a target. So this is the only information I can give you here. And once again, I think that as long as the Bitcoin would keep going higher, all the cryptocurrency would follow the move. Now, Ethereum, what do we have? So this one is interesting. So we had here this massive move up, then correction, just like the Bitcoin. And now we are starting to go higher. So we can see that the 42,000 equivalent of the Bitcoin is here 2,900 roughly. So I believe we would go back there. We can see that we have this same bearish divergence even more clearly here on the Ethereum, which shows weakness. So to me, we have two weaknesses already coming from the two major cryptocurrencies. So watch out. There could be a pullback coming soon. In terms of levels, the next resistance is at 3,575 exactly. And if I try to do some Elliott wave counting inside this 1, 2, 3, 4, and 5, maybe something like this, you see? So this would make sense to me. It's basically, you know, a bit the same counting as for the Bitcoin. And I guess we would have a pullback to the 2,900 level, which would be a nice opportunity. So let's measure in terms of fibs, even maybe deeper, guys. All right. This is a minimum. 2,900 is the minimum level we would retrace to. I would personally enter on the 50 and 61.8% retracement. So lower, around the 2,600 level, 2,500 level. Okay, this is to me a nice level to buy on the Ethereum. But once again, you know, sometimes the corrections are more shallow and they only go to the 38.2%. So if you really don't want to miss the move up, 38.2 is the level that can be used to set up your buying and orders. And in terms of target here, guys, it's pretty much the same thing. So we have a very nice fifth wave to come. Okay, then next one, guys, the Dogecoin. I know you like this one. So here it is. What do we have here? So I checked first on the 4 hours. I see 1, 2, 3, 4. So we're on a fourth corrective wave. That is, seems to be a big triangle, all right? That is here. And right now we have started the fifth wave, okay? So first thing, let's measure, use Fibonacci projections. Bam, bam, bam. You measure from 1 to the top, the bottom of the 1 to the bottom of the top of the 3rd. You apply it to the bottom of the 4th, and this gives you 1.35, all right? So this is my target for Dogecoin in 2022. In terms of level, what do we have here? Let me zoom in a little bit, okay? So we are here in this first move up, okay? Just like the other cryptocurrencies, so 1, 2, 3. So it looks to me like here we are missing clearly one wave, which is not the case on Bitcoin and Ethereum, all right? The Dogecoin has more room on the upside. So maybe if the other two just keep grinding a bit higher, Dogecoin might actually make some nice move up, all right? Because I think that Dogecoin can go to 43,000 for the top of the first wave. Let's apply here, same 1 plus 3, you measure bottom of the 4th. Okay, so this is giving you here as the third wave is extended, we're gonna have maybe some lower ratios. It's not helping that much. It's not matching any level here. You know, I would say 40, the 0.618 is the usual one. Either you go to the 1.618 if the fifth wave is extended. If the third wave is extended or the first wave is extended, then you usually go to the 0.618. So just keep those levels in mind. So here it would be 0.4 for the top of the first. Why not? This could make sense. So let's see. But definitely if the Doge breaks 0.32 here, this trend line, we would have probably a fifth wave of the first coming here with like a nice 25% move up. So to me, there is a nice opportunity here. And then same thing, guys, we would probably have this pullback. So once again, if I would need to give you a level to enter on the Doge, so let's imagine we go, I don't know, to half of it, maybe here. Same thing, guys, around, you know, between 25 and 30 would be. So right now we are at 31. So, you know, right now is not that bad, guys. Okay. Because if we go higher, then we correct. Actually, we're not going to be much lower than today's level. So on the Dogecoin, I think that right now is actually a nice buying opportunity to play this fifth wave. And if there is a pullback, you can still increase your position. So that's it for me. I hope you guys enjoyed this video. I hope I managed to explain how to combine Elliott wave countings, all right, 1, 2, 3, 4, 5, ABC, with Fibonacci retracements that can help you to identify at which level the pullback might go, and Fibonacci projections that can help you to find some target for fifth waves. So that's it for me. And if you did enjoy this video, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.